trying to go live today, and we are live. This is fantastic. Thank you all for joining us today. Steel and the Arcane Bear. We are going to be taking a look at Bitcoin. Everyone gets a little worried when there's downtrends. It's always kind of funny to see. First off, we never try to buy the bottom and we never try to sell the top. But remember, we're pretty much in the middle of the bull market. So if you joined here late, it means you're new and you want to counteract that generally. So if you haven't and you did join late, well, let's go over and see what we can take a look at. Bitcoin on the daily right now, looking fantastic here. Right in the right near the bottom of this trading range. Perfect. We were kind of looking for that. Now on the right hand side here, this is the volume profile. And as you can see, we have a fair amount of support that comes in around 39,000. There's a nice big gap here around 43 to 39,000. Now when we made this initial run up, we went up 100%. So keep that in mind. Every time you go up 100%, you should expect a slight retrace. The fact that people get worried in these moments always surprises me, because it generally what happens is, first off, you should have been buying back here, but then retail is what we call it, joins at the very top of the market. They're like, oh my God, fine, I'll just buy more Bitcoin when it's at $56,000. Now what does it do? Obviously it drops. We see our primary shakeout here. And this is generally a time where what ends up happening is someone will have bought at $58,000 and they'll sell at 41 or something ridiculous like that. The exact wrong thing to do in the market. So how do we overcome that emotional trading and lack of education? Well, we keep studying. So for me, this looks beautiful. We're right at the bottom of the trading range, which is the previous resistance of the last buying climax. Everything here looks very healthy to me. What we will go to do today is we'll throw in some of our momentum indicators. We don't use these too often, but let's take a look here for fun. So here is the kind of messy chart with our momentum indicators. First off, if we zoom in and we get rid of some of our charts, we can see we're right at the bottom of our Bollinger Bands effectively, and we've stayed below the moving averages on the 6 hour. On the daily, it's even clearer. Wicks right down to the bottom of the Bollinger Bands. And again, you can see the way this kind of highlights this area that happened in the previous accumulation area near the bottom of the channel. So not too long ago, we had the exact same thing happen where you had this push down into the bottom of the trading range. Everyone gets scared. There's double spend issues. F2 pool is dumping. All the nonsense of the news comes out. But ideally, we knew this was going to happen. We just thought it would happen a little sooner. I thought we were only going to go to 48,000 to have a retouch into 42,000 before going up higher. So the fact that we went higher first is not really all that worrying to me. Now, as you can see, the idea behind us is green, and everything is looking smooth so far. So the problem here is a lot of people are like, oh my God, we're down 30%. Why is the light still green? Well, because I'm really not all that interested in these short-term changes. I'm much more interested in this macro perspective. And for those of you who have been joining and studying with us for quite some time, you'll know why that's important to me. I'm not a day trader. I don't want to be. It sounds like a horrible, horrible idea for my emotions. Although, can you make money doing that? Yeah, sure. I can make money doing anything in life. I could make money selling on Amazon drop shipping, but I don't want that kind of stress and redundancy in my life. So I like these long-term plays. And here you can see when we are going over our primary accumulation patterns all the way back between June, July, and August. Now, if you go back and look at those videos, I was extremely excited about this first reaccumulation range. And as you can see, as we continued up, they started to get thinner and thinner. These previous two accumulation ranges or reaccumulation ranges are very volatile in comparison and also show us something important, which is that we are in a market cycle and right in the middle of it. So these big profit taking moments where you have 40% down days is kind of normal for Bitcoin. I thought we would see it earlier, but here we're seeing it later. Does it make a difference? No, because ultimately we are exactly where we would expect ourselves to be when we look at these trading ranges. And so for those of you that are studying, you will recognize how clearly this has done. Now, in terms of Ethereum, we'll go over next, it looking weaker. But that's to be expected. It has lots of competitors, and there are other people who are working in the DeFi sector to bring a smoother play in a lot of these functioning ecosystems and the money Legos itself. So Bitcoin's our collateral layer. I've said this many times. This is our effective money in this ecosystem. So this sharp return down to 44,000 and maybe around $39,000, $40,000 for a spring, not too dissimilar to what we saw here. I remember back here when we were at 30,000, people were like, oh, it's going to 20 grand. This is it. Like, it's going to have a big market dump. I was like, no, guys, I feel pretty confident we're going to stay above this trading range here. And we did. You had Elon Musk and Tesla buy $1 billion plus worth of Bitcoin at around $30,000. A few days later, make that signal, and the whole market had a run up. And then here, this is just general profit taking. This is very, very normal. So we can see and highlight this by going to our Glassnode settings. I'm just going to make sure I stop this so the stream functions as smoothly as possible. And we'll go back to Bitcoin. And we're going to start off by looking at the net miner positions. So one of the favorite things that we've gone over is the net miner position change. And what's fun here is we've actually had a few days in the opposite direction. So lo and behold, there's actually a lot of miners selling frequently over the last few weeks. Now, the last week where the F2 pool was supposedly selling, it represented a very small percentage of what had been sold since the beginning of January when the price was around $27,000. But more importantly, we have, for the first time in multiple days, the miners actually continuing to accumulate more. So another 1,300 Bitcoin into the miners' wallets and another 656 into the Bitcoin miners' wallets in the last 48 hours. The other interesting part here is always the way we look at the exchange balance percent and the movement off. So here again is the day that the F2 pool supposedly tried to dump the price. All of this new supply came onto the market, and less than 24 hours later, it was all gone and off to cold wallets. That is an extremely valuable sentiment to understand that all of that Bitcoin that they were supposedly dumping got chewed up, turned around, and locked the fuck up in a cold wallet somewhere else. That means there's still an enormous amount of support in this accumulation area. And again, just for the credence to why this bottom of the trading range looks extremely healthy to me. We want to remember that it's very easy to get pushed out of positions in a bull market. And a lot of people they panic, right? This is the first time we've seen this amount of supply come into the market, but it makes sense. You have to remember that Bitcoin miners' businesses is literally to create the Bitcoin and then to sell it. That's extremely important. They always make Bitcoin so that they can sell it, so they can continue to mine more Bitcoin. It's a fucking business. It's equivalent to be like, oh my God, the company is selling cars that they made. Well, of course they're selling the cars that they made. That's their business model. So this was to be expected. After you see a 100% run up from the previous trading range, you should expect a downfall. But to me, this does not signal the market is over. It looks perfect to continue the rest of the bull market. And I suspect that the automatic rally here for Bitcoin is going to be a nice one, probably up to around the $54,000 range. Now, I do suspect that it'll probably come a little bit lower here into the $40,000 area just because of where we have the support on our volume profile. Now, Ethereum, on the other hand, definitely does not look as strong. And there's a bunch of reasons to go over that, and we can look at this in some of our Glassnode data as well. But I want to point out that the ecosystem in which Ethereum is trying to build has a lot of competition, and they are in by no means the best position to be the clear leader of this sector. So when Ethereum has its next automatic rally, I'm going to be deciding how much I let go of this position. This weakness that we see in the market right now, this obvious dip below the primary trading range and into the ladder trading range is not unhealthy, but it definitely shows the lack of confidence in this ecosystem that Ethereum has been trying to build. And remember, you've got other great competitors out there like Cardano, Avalanche, and Polkadot. So this next automatic rally, which clearly looks evident in Bitcoin here, clearly the bull market is not over in Bitcoin. In Ethereum, though, there's definitely a lack of trust by those who are building in this sector to want to continue to invest in Ethereum. I am in no way a maximalist. I am specifically interested in this sector as a venture capital play on the long term. And Ethereum here showing this weakness, well, for multiple reasons. Number one, when you have the CME exchange come online, what allows others to do, especially big players, is to put shorts against their position and not exit their full position, but still have coverage to the downside. And often big funds will do that. When they hit peaks, they'll take out short positions at like a 3x leverage to cover their downside for the spot positions that they hold. And now that we're seeing this weakness in the market for the first time in Ethereum specifically, again, what it signals to me is that there is not a lot of trust or faith that Ethereum is going to solve the problems that it has in time before a competitor might beat it. Clearly visible here in the price action. Now, if we go to the rest of the market, you look at Link. Link is sitting right on the cusp of its previous trading range as well. So here we had a nice rising channel, but we're right at the top of the trading range here. So this is not unhealthy yet in Link. The only thing I'm worried about is that this was a very small amount of supply to cause a very significant down pressure in the capital influx. Now, we've seen that everywhere. Avalanche has come a lot lower than I thought it would, and it clearly hit a level of distribution since 44. Now, the important part to hear and to remember, guys, is that I have clearly stated over and over and over again that if you want to play in the rest of the sector, you should think about it like venture capital, which means that you should assume that there is a high amount of volatility in these trades or these positions, and that you should limit the risk of the volatility by putting only in what you can afford to sleep on, basically. Not lose, but sleep on, which means that I put a big chunk more in at around $44. And although I'm sure what I'm down right now would probably make most people lose sleep, it doesn't bother me because this to me is a venture capital play that's designed to outweigh and bet against my Ethereum play. Now, I think one of the smartest things to do here is to look at the DeFi perpetuals and to some degree or another ignore any of the individual plays and look at the entire sector. We had a clear breakout of the DeFi perpetuals on FTX outside of this trading, outside of this horizontal or this widening megaphone Jussie Livermore pattern. And here we can see a return directly to the bottom of the trading range for the DeFi perpetuals in general. Now, remember that the DeFi perpetual is a basket of like M-Stable, SRM, SRX, Avalanche, Polkadot, any number of the other DeFi plays that are out there. And it gives us a kind of a clear indicator that the DeFi sector is still very strong. Now, we could make an assessment here that we're going to see a quick return back down to this longer term trend line, which could put us again a little bit lower for both Ethereum and a few of the other plays that I'm interested in. M-Stable was another one of those where we clearly broke below the trading range, but these are all venture capital plays to me, which means I know that the volatility exists. I'm interested in the next 5 to 10 years of these plays. Even if they go to zero, I don't fucking care. That's the point of playing venture capital properly. I put in what I'm willing to risk to sleep on, even with these volatile downswings where we're down 43% off the bottom of the box from M-Stable. Same with Avalanche, down approximately 30 to 40% from the secondary entries I made here at 39%. But this is only on a day-over-day basis. What's interesting is that if you take the venture capital mindset and you think long-term, you come up with a much clearer picture of how the market actually works. Some of our initial entries for Avalanche were made between $5 to $9 way back here. So the fact that I doubled down and have gone lost part of my secondary position is just really balanced out the price that I took in my primary positions. But I don't really care what it does today. I don't care what it does tomorrow. I care what the next 5 years look like. Again, it behooves me to think that $1,000 in Binance token in 2017 is worth like almost $1 million+ today. That $1,000 in Dogecoin in 2015 is worth almost $500,000 today. This is the commonly misunderstood aspect of venture capital, which is that, oh, when do you take profits? I don't want to. What I've started to do, well, here Avalanche was a little bit of a different one. I actually doubled down on my play instead of taking my initial, but what I suggest, which is the opposite of what I did here with Avalanche, just maybe not the best example. I'm just really excited about Avalanche still, even with this downward price movement. We could go into some of the liquidity potentials that are coming in as the pre-sale tokens come out into the market effectively. But nonetheless, Look at what Ethereum was when it was back at 30, 40, $80, even in our primary trading ranges way back here. You were down at $80 in March, $118 in March for Ethereum. We're up at 3,000. I made most of my primary entries around here at this 380 mark, and you can go back at our videos and watch these moments when we were making our first entries into the bull market. The sad thing is most of you guys don't show up until the bull market is already halfway through, if not almost over. Let's say you're lucky, you're showing up halfway through. The point about venture capital is to, again, put in what you're willing to sleep on for a long period of time, because $1,000 in Binance token would have been worth an enormous amount more. But had you got scared, you're like, oh my God, I put in $1,000, it's down to $500. I might as well just take out that $500 and put it in Bitcoin. You've ruined the entire play by being far too focused on the micro trade instead of the macro trades. And when I'm in VenCap mode, I am only macro play, because day over day, it doesn't make any sense. I'm not trying to invest $1 million into Avalanche. Even if I want to take a big play, let's say I want to put $100,000 in, any of those spaces over the next 5 years could be worth an enormous amount more or nothing. And that's the way I try to play this sector. I try to look at almost everything else as venture capital, because there is an enormous amount of volatility here. Let's take Cardano as another example. And go look at Cardano or Aave, any number of the other DeFi plays. Actually, I have to add Cardano back here, ADA. I was cleaning up the charts this morning. Let's go FTX perpetual, no, FEMEX. Where's the FTX contracts? Okay, there we go. Cardano perpetual futures on FTX. Okay. So here, look at Cardano as a great example, right? This is a clear venture capital play. A lot of people in the retail sector are entering now with an enormous amount of extra risk on the table, when the smart thing to do is get in near the bottom and make some of your plays here. Now, the difficult aspect is that because the big players advertise their holdings by jacking up the price, you as the new investor don't get interested in here until you finally join. So I think the important part here is to remember that this is not the last bull market. It is very clearly not the first as well, too. So you want to make sure that you stick around. What most people do wrong is they enter here, they close the position, and they forget about it when 3-5 years later, maybe Cardano is up at $8, right? 8x higher than we're at today, but they take these little daily minutia movements as something to scare them, because they didn't play venture capital properly, which is they didn't think about how much they should enter. All they think about is, oh my God, if it goes up this much and I've got this much in, it's going to be worth this much. But what you should be thinking is preservation of capital. If it goes down this much and I lose this much, how will you feel? And that's the right way to play with most of this sector. If you are putting too much in that you cannot sleep on, you're playing the game wrong. Anyways, keep that in mind. So back to Bitcoin, everything is looking extremely healthy. The trading range here looks perfect. It's like a picture perfect trading range. We had talked about a return to this area multiple times. As soon as we broke out here, we talked about a return to this $40,000 area. It is no big surprise that we are back down here already. So keep that in mind. Yeah, a lot of the times the new investor doesn't join until way up here, because they're joining on all the hype of, oh my God, Bitcoin's go to $1 million. This is it. It's going to hundreds of thousands. And although I think it will go over 100 grand, maybe even up as high as 200 grand on the next like kind of cycle top out. After these next automatic rallies, I'll be shaving off profit, because anything above here is gravy for me already. Same with Ethereum. You have to remember that I made most of my entries back here around $300, right at the primary exit of our trading range. So if you go back and watch all of our videos back between July, August, September, what you'll be able to see is my main interest in this trading range started a long time ago. Now, secondarily, here we go. Let's go to the daily. It'll be a much nicer picture. Okay, so here is what we had been watching for Ethereum for 2 to 3 months before most people started to show up. Right? So I was really excited about this moment back here when Ethereum was around $370. You can go watch all of our videos. I'm like, yes, this is it. This is the place where I'm taking my final positions. We've had our SOS. We've had our backup phase. We're having higher lows and around $404. And like, we've broken out of this smaller trading range. We are going up. Everything here for me is in gravy. And although I have accumulated and added a few spot positions on the way up, approximately there, most of my initial trades were taken way down here. So it behooves me, again, to help the new investor recognize the importance of understanding the market cycle as a whole. I do not think the market cycle is done. Ethereum, though, is definitely showing more weakness than I would be excited about. And I do believe that's because there are so many other competitors in its sector to try to take the wind out from beneath Ethereum's wings. And again, the other important part to focus on is, look, here's the previous all-time high, and notice how that's currently acting as support for the price that we are at right now. So as we go into the smaller time frames here with Ethereum, not only are we on the primary top of the trading range that we are following, we're also at the last all-time high from 2017 as support as well. So I'm very excited. I don't think that there's no reason why the light will have changed in this sentiment, although Ethereum is looking much weaker than I would have liked. I would have liked to have seen strong support above the $1,450 area. What it signals to me, again, is that the larger investors are going to be taking plays in other spaces, just like myself. Ethereum did not solve its problems quickly enough, and there are new technologies on the block that can definitely outpace Ethereum if they do not get there together. So on the first automatic rally here, I'm going to be making some core decisions about what I do with my position that I took back around $300. Because if we see an automatic rally that looks weak here, we can't get above the middle of the trading range, I'm likely going to close out part of this position already, even though I do believe we're going to go higher, because I do not think that the bull market is over. And clearly with Bitcoin, it is not over. And I believe that will push up the rest of the market. I'm still weary about Ethereum's capabilities in solving the problems that it has today, when there is much better technology out there already. Anyways, that's my general market assertions for today. I'll take a few minutes and go over some of your guys' thoughts and questions. So this is the time to leave them in the green. Let's take a look at what everyone has to say in the chat right now. Phil Snow says Polkadot and Link are basically sure bets. That is absolutely untrue. First off, guys, understand that there's no such thing as a surefire bet this early on in venture capital. Everything could be replaced by something else. So keep that focus on. It's very easy for anything to be replaced by something else. This is all venture capital in my mind. So don't think that there's a surefire bet here at all. Bitcoin's pretty much the only one now that has had enough time on deck to say, okay, that's a surefire bet. It's still volatile as fuck, but it's much less risky than it was back in 2017 in terms of saying like, oh, well, I can rely on this to be here. Link has not secured that. Polkadot has not at all secured that. So I disagree with you here, Phil Stowe. Although I do think they are great venture capital plays, there's no surefire bet in any of those. John Hunter says, what do you see Ethereum doing in the next couple of months? Again, I don't try to predict the future. I just follow every day and watch the market. Because we are in such an early stage of the development of some of this technology, it would be kind of silly or idiotic to try to predict the future. But what I can say is that if these trading ranges start to close below and show obvious signs of distribution, which we have not seen yet, I'll take a different stance. Until then, even though I've seen weakness in my avalanche play, well, at least from my secondary entry, I'm not at all concerned about the bull market overall, because Bitcoin is our leader and it is fucking beautifully placed right now and everything looks sexy as fuck in Bitcoin. Ethereum, on the other hand, is showing that weakness, and I do believe that it is because of the rest of the market sentiment. So I'm not going to try to predict what Ethereum will do in the future. I do still think we'll get to the top of that secondary regression line around $2,600, but that could very well be it, as people are going to be looking for other venture capital plays because Ethereum has obviously not solved its problems. And we're in the middle of the bull market and it has still not gotten there. So not very exciting for Ethereum, at least. But again, we don't know. We don't know what the future will hold. That's why in venture capital, we try to actually make a bunch of investments because we don't know what's going to happen. I'm not a maximalist in any way here. In fact, I signal my own intelligence by saying, I don't know. Keep that in mind. Georgia says, you said that 100,000 for Bitcoin in the next cycle, then the color is still green. The color is still obviously green behind me. I think a lot of people have a hard time recognizing market cycles as a whole because they're like, oh my God, we're down. How is it green? Well, because I have a macro perspective. I'm not looking at the day to day. Guys, we've been making entries into Bitcoin since it was 9 grand and earlier, actually. I think some of the first times I turned back the short that I had was around 6 grand. You can go look at those videos. I went short, closed out my short around 4,300. I jumped back in. I was short for a minute at 6 grand, closed that out when we got stopped out, and then I was long Bitcoin since then. So keep that in mind. I've been here for a while. The fact that you guys, a lot of you show up late is your own fault. It's your own goddamn problem that you showed up this late. But at least understand the mistake that you made, which is you entered as the price got higher instead of recognizing the undervalued when it was important to do so way back in July and August. So it's a learning lesson for you. So the color is still obviously green because I'm a macro player. I'm not interested in these day-to-day trades here. And this looks beautiful to me here. This is the perfect run into resistance for our primary shakeout for Bitcoin. Now for Ethereum, it does not look as sexy at all. Although with the area chart here, we are closing right up and into our previous areas of the support and our buying climax and our automatic rallies. Just that general weakness in Ethereum does not look good to me. It just means that there's going to likely, even if we do get a nice bull market out of Ethereum, the weakness here will continue. We could even see a dip down to $1,230 for Ethereum here before we see any type of automatic rally. I definitely don't. Stranger things have happened than in the market cycles. Again, that's why venture capital, understanding the concept and the philosophy behind what venture capital means, can be so valuable for an individual because it allows you to make sounder investments without trying to become an occultist and join a religion about who's going to be successful or why. Yeah, guys, one of the things I want to point out is that I'm not married to any of these positions. If Ethereum's not solving its problems and other players are, I'm happy to leave that position. I haven't yet, but I'm happy to. I'm not like, oh my God, Vitalik Buterin is God, Satoshi Nakamoto God. No, I'm not that stupid. I understand that value itself is a religion, obviously. Otherwise, the US dollar wouldn't fucking work. There's a bunch of people that are extremely religious about their investments. I am not. I'm much more religious about like ayahuasca or something that has real truth and wealth behind it, but that's another story. Not for today. Rex Banner says, Tio, you're a gangster. Thanks. Do you think that ETH will hit a near 3K in a month or two? Again, I don't try to play that. I try to look on the daily. Currently, Ethereum's weakness here is showing that investors are less and less interested in it. Oh, here's a nice question. Pouncing Penguin says, do you think the instability in traditional markets will carry over to Bitcoin? It always does. Instability in any markets always carries over to Bitcoin because Bitcoin is extremely volatile. So one of the ways we like to measure that, which is currently closed today, is in the VIX chart. The VIX is the volatility index, and it measures the general sentiment of investors in the S&P 500. And we're at a new high again for the volatility index when we closed the other day at a whopping 40%, right below the previous trend line as well. Now we are in a descending channel for the volatility index, but the spring is right around the corner. You have ivermectin trials right now proving to be significantly more efficacious and fucking cheaper than the vaccines, and countries around the world have started to implement that, and they're already recovering. The pandemic, in my mind, as soon as ivermectin gets recognized for what it's been able to do, is over. That will likely come to light around the end of springtime when the sun starts to come out, people's vitamin D levels start to go higher, and in general, their hormones start to act a little bit more euphoric. I think the bull market will finally start again once that happens. But for now, these big spikes in the volatility index, if we close below here, we do not touch the top of this trend line as we have been doing multiple times since the beginning of 2020. I believe we're going to fall back down to a normal level around 15 points for the VIX. Now, if we look at the S&P 500 and we take a more broad perspective, we can definitely see that there's room for a mass spike of volatility. Here was the previous trading range. We were quite excited to see it go higher. Went back here and we were looking in October. Our entire market cycle has done that. It looks like we could be getting a retest of the top of the trading range for the S&P 500 as well, which is normal. We've gone over this multiple times, but one of the areas that we like to see is this reaccumulation schematic 3. Now, the schematic 3 can be a little bit mischievous because it will go way higher above the box before coming back down, and it looks to me that's exactly what Bitcoin had done as well. You had a nice breakout above from the primary support and this perfect declination right back into the previous area of support and resistance from the buying climax and the automatic rallies. This to me looks like a beautiful reaccumulation schematic 3. It just happens to be a little bit different because when you're hunting an animal in the wild, there's no way the footprint is going to look exactly the same. Once you look close enough, a pine tree doesn't even look like the other pine tree you're just looking at, because the bark or the changing of the buying and selling, at least in what we're doing here, is infinitesimally different. I think there's a quote that says, no river is ever the same twice. That's because you have so many small changes happening in that river on a day-to-day basis that it is not the same. The water is different, the rocks are different, the edges have changed. And that's important to recognize because these reaccumulation schematics here are just designed to be like an identifier, not an identical identifier. So this to me looks really healthy, and the S&P 500 looks due for that retest of the 360 mark. Now, again, this could signal a big shakeout for the rest of the market because when we go back and we look at the volatility index, unless we see clear closes above that here as well, a sharp down move in the S&P 500 would definitely shake the Bitcoin market. And more importantly, look at how Tesla has looked. Tesla has looked like an altcoin, basically, we'll say. Massive distribution after this top trading range broke down. But more importantly, it's still within its larger trading range here. I think Tesla is going to be a nice lead indicator for what the rest of the market does. And we haven't seen that automatic rally off the bottom of this support line yet. So I'm actually keeping a close eye on Tesla. I think it represents a large indicator for what belief in kind of new tech can do in this sector. And as them having been such a big investor in Bitcoin recently to part of their balance sheet, just shows an extremely high level of intelligence for tax reasons. I'm sure some of you guys can figure that out if you do your homework. But again, nonetheless, this Tesla, I think, is going to indicate to me what happens in the next cycle. So we're looking for our first automatic rally here. And again, Bitcoin, Ethereum, they're all doing the same thing. Although Bitcoin is clearly healthier, there's clearly more interest in Bitcoin as a whole. And once we have an automatic rally, move off of Ethereum here, I will likely shave off part of my position. Anywhere here is still in profit for me, but I will likely shave off positions of Ethereum back into Bitcoin on the next automatic rally here. Just because this weakness in Ethereum is clearly unsexy to me. And I would rather be in a more favorable position. Now, we've had great gains off Ethereum. The Ethereum play has itself outpaced Bitcoin, but just this weakness in this trading range doesn't look good to me. I'm not happy about it. Let's take a look at a few more of your guys' thoughts and questions before we finalize today's show. Nice. I'm glad you guys have all studied ivermectin. That's fun to see. Yeah, again, guys, the problem here is a lot of you are new to this ecosystem. Um, and you don't enter the markets at a proper time. You enter when the risk level is significantly higher. So for those of you that are just joining the markets for the first time and finally got here, what you want to take away from this moment is to remember that a bull and bear cycle happen frequently, and there is always an opportunity to buy much lower. The problem is you're not attracted to the things that are low on the ground. Like, I think the best analogy is to just to look at the way the average human looks at relationships. You don't go to try to find someone that's got a shit ton of a potential, who's dragging around near the bottom of their life and like, yeah, I'm going to accumulate that partner right there. 'Cause he or she is like street artist at that moment, but I can see that they'll be an extremely talented artist in the future. No, most people look for people who are on the up and up. But that's not how you invest. You want to look for that's down in the dumps, basically. It is against your human nature to be a good investor. But once you recognize that, it's very easy to change and become a much better investor based off your understanding of why you make a bad investor, because you just bought Ethereum for the first time at $2,000 when there was ample opportunity to buy it way down at $300 between September, October, November, but you didn't. Right? So why? Because you're not attracted to things when they're low, you're attracted to things when they're high. If you fix that mentality, you will become an infinitely better investor over time. So any of the mistakes you make today will pay off in the future as long as you recognize them now. Anyways, we're going to leave it at that, guys. Thank you all for joining us today. Give us a thumbs up if you like this content. If you're new to the Bear family, please remember to like or to subscribe, hit that notification bell. One of the things I guess we'll do here really quickly is just the other day we went out and I don't know if you guys watched the video, but we made, let's go and take a look at this. We if you haven't seen this video yet, go to the YouTube channel and take a look. We visited a local family here. They live on a dirt floor. They've been cooking over fire. Which is crazy. I can't even imagine living with a dirt floor and cooking on fire every day. So we bought the family a month's worth of food. We bought them a stove. We paid for their floor to get fixed so that there's concrete on it. And we did a video about it too. So our goal here was to never spend our marketing budget on Facebook or YouTube advertisements to jump up in front of your feed. It's always been to do something good with our advertising budget. You guys can decide if you like the Arcane Bear or not. So here we have this video that we did the other day. It's called Giving a Family in Need $1,000 in Supplies. Go check that out. Lots of great feedback from everyone. I really appreciate the support. And more importantly, one of the things we like to do is also give to Kiva. So here on our Kiva, look at this, guys. In this year alone, we've made loans of $6,775 together. We've done absolutely amazing. I'm really excited about that. On tomorrow's episode, we'll make another loan of $500 to $1,000 to an entrepreneur, because the point of this is to, at least the point of this sector to me was always to help the underbanked and the underserved. And I want to make sure that stays a banner flag of this sector, because that's why I bought Bitcoin in the first place, is because it for the first time represented a money that we could pick. It didn't have to be provided by a government. We could do our own things. We could outpace the government. So anyways, thank you guys for supporting the Arcane Bear. We will see you again on the next episodes. I'll be live again every day. Yesterday was the only day we weren't live because I figured that yesterday's video covered, and so I took the day off. I went to the beach, surfed, laid around in the river, and I'm also now going to go to the beach and river, play in the waterfalls, because I live in one of the sexiest places on the goddamn planet. I love you guys. Thank you for all your support. See you with the Arcane Bear, and we'll see you on the next episode. Boom.